Welcome to Trading Nation. I'm Mike Santoli. A new report suggests Apple stock is cheap relative to the broader market and trading at a major discount to its peers as well. Bespoke's Paul Hickey is behind those findings. Paul, good to talk to you here. I guess my first observation is that for years it's been possible to say that Apple looked relatively cheap, and over the course of those years, on a net basis, the stock has done well, but there have been periods when it went straight down and periods when it went straight up. So I guess what's the investor takeaway from your work?
Yeah, so I think when you look at Apple, it's cheap relative to the broader market, but it's also cheap relative to not only the tech sector, which is trading at about a 25% discount. But it was interesting earlier this week when Tim Cook was at the Berkshire annual meeting. He almost distanced himself from describing Apple as a technology company and more as a consumer products company, pointing to the fact that Warren Buffett doesn't buy technology companies, and the fact that he owns Apple is a sign that it's more than just a technology company and more of a consumer products company. And there again, he's trying to pivot to making the multiple more towards the consumer sector, and which trades at a similar valuation. So I think when you can just compare Apple to any other sector, and it's trading at a cheaper multiple. Even mega caps in the S&P 500 trade for over 20 times earnings, whereas Apple's trading at under 16.5 times earnings right now.
Yeah, I mean, it would seem that there's a valuation cushion there, even without taking account for the huge net cash position that Apple has. Although part of me says, well, when everybody knows a lot about Apple and follows it very closely, and yet the market just will not give it a full market multiple or a premium, despite all of its virtues, what is that telling us about what the market's estimation is of the long-term path for the earnings stream, I guess?
Yeah, so, I mean, you never want to look at the market and say the market's wrong about where it's pricing something, especially like you said, Apple's traded at a cheap multiple for some time now. But I think if you look at Apple and you look at the stock, unless you have a negative view towards the broader market overall, it's hard to not like the stock at current levels. Like you were just mentioning, its high cash position. The dividend yield is only a little bit less than the S&P 500. It's going to be buying back stock, and it's really, it's like a lot of consumer product companies. It has a very stable revenue flow. I mean, it's becoming more and more predictable, and especially as it branches out into other areas like the services sector, which is still a smaller part of its overall revenue, but a growing share.
There is another piece of this that I sometimes gets mentioned, which is based on all these different ways you can slice the numbers. Apple, despite how big it is arguably under-owned by professional investors.
Yeah, so I mean, you can look at the overall. There's some people will come out and say that Apple, it's the largest company in the world. It can't grow. It can't go any higher. But to your point. There's some, that you can make the argument that it's under-owned. People give the attitude that it's so big that why would I own it now, because, it can't get any bigger. But the company, it's a very stable grower within the S&P 500. It's become much more predictable, and predictable is what a lot of, investors are looking for.
Yeah, and Warren Buffett seems perfectly content to have Apple buy back stock from the public to make Buffett's stake even bigger on a relative basis. Paul, great to talk to you today. Thanks a lot.
You too. Thanks, Mike. Take care.
All right, and thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.